How to make profit from stock market investment following an intraday or short-term investment strategy. This can be a profitable strategy, but it is also more risky than long-term investing. Only high-risk category of investors should follow this. Here is a strategy for making a profit from short-term investment in the stock market. Identify stocks that are likely to experience short-term price appreciation. This can be done by looking for stocks that are meeting or beating earnings expectations, that have strong technical indicators, or that are benefiting from positive news headlines. Set a stop-loss order to limit your losses. A stop-loss order is an order to sell a stock at a specific price, regardless of the current market price. This will help to protect your capital if the stock price moves against you. Take profits regularly. Don't wait for a stock to reach your target price before selling.
How to make quick profit from stock market investments. Short-term stock market investment strategy to earn high profit. Buy selected shares and sell within 1 day to 1 week. This is a very risky investment strategy to earn profit in the very short term. Most of us do not have the patience to wait long term to get the profit. For those investors, this strategy can be opted for with high risk. As a general rule, equity investment should be for the long term, and we always advocate for this long-term investment strategy. However, this market can give profit if someone is smart enough. Follow this strategy with a specific amount dedicated for this high-risk investment strategy, for example, 100,000 rupees. Ensure to use only that money dedicated for this purpose, nothing else, with a strict 20% stop loss. For the last 1 month, this strategy has generated a profit of around 30% of invested capital and an annualized return of around 360%. Buy and sell shares on the same day or within a week's time. This market is giving a lot of opportunity for this. But sometimes you need to hold for a little longer. This all depends on the movement of the particular stock price. For this purpose, you need to dedicate some time to find out the suitable company shares. Read the financial newspapers, reliable online platforms, and other stock, security market related websites that give news related to stocks, mutual funds, and other securities. Carefully study the news and then take action. Ensure to sell the stock within the short period to earn high profit, since you bought the stocks based on publicly available news, and there is a chance to lose money if you hold the stock for the long term. Here you need to capitalize on the short-term impact of the available positive news related to a company. The impact of this positive news may be short-lived for a day to a week. For example, a company's announcement of a new product was met with positive news coverage, but the impact of this news may be short-lived for a day to a week. Investors should be cautious about buying shares based on this news alone, as it is important to consider the company's long-term prospects before making any investment decisions, in case you are planning to hold these shares for the long term. The news may be related to the quarterly and annual financial statements of a company making good profit compared to the relevant previous period. Getting big orders to supply their products or getting big contracts, export orders. Stock-specific news like bonus, split, right issues, dividends, merger, acquisition, stock buyback, company expansion, opening of new manufacturing facilities, winning of high-value orders, adding more clients, debt reduction, restructuring. Industry-specific news such as government announcements like tax soap, GST-related, government subsidy. Export, import-related allowance. International news. Climate-related news, good expected monsoon, better than expected agricultural yields. FIIs, mutual funds, and domestic institutional activities or buying in a specific company's shares. Changes in fuel prices like crude oil, coal, and energy, electricity. Monopoly stocks activities. Government announcement related to infrastructure spending. RBI policy decisions, increase, decrease bank rates. Changes in company management. Forex rates, foreign exchange reserve, crude oil price. Inflation data. Changes in raw materials prices. Invention of new products, obtaining new patent rights. When you follow this strategy, ensure the tax-related matters. In case you do intraday trading very frequently, the gain may be treated as business income instead of short-term capital gain. The income from trading is treated as business income, and you are required to file income tax returns under the head, Profits and Gains from Business or Profession. These profits are taxed as per the applicable slab rates, which can go up to 30% depending on their income level. So try to avoid intraday trading to get the benefits of short-term capital gain, which is taxed at the rate of 15%. Keep in mind that short-term investment in the stock market is very risky, and there is a chance to lose your money. Be careful while selecting stocks and ensure to put a strict stop loss based on your risk appetite. This is not an investment recommendation. Do your research before buying any securities. This is a high return, high risk strategy suitable only for high risk category investors who can afford to lose their money. Disclaimer: I am not a financial advisor and cannot give financial advice. Please consult with a qualified financial advisor before making investment decision.